Warning: the consumer debt bubble is about to burst, and it could crash the crypto market. Are you prepared for the chaos coming your way? A financial disaster of massive proportions is unfolding, and it could directly impact your crypto investments. Stick around, because this could be your last chance to act before it's too late. Let's dive into how this could affect you. Consumer debt is the money we borrow from banks, lenders, or even the government. This includes credit card debt, auto loans, mortgages, student loans, and buy now pay later plans. Most people rely on credit to finance their daily lives. But why is this debt spiraling out of control? Let's break it down. Over the years, consumer debt has exploded due to rising living costs, stagnant wages, and the increased use of credit to cover everyday expenses. What started as a way to help people buy homes, cars, and pay for education has now turned into an overwhelming burden for millions. In fact, consumer debt in the U.S. reached an all-time high of $18.2 trillion in the first quarter of 2025, and it affects nearly every American family in one way or another. But what does this mean for the broader economy, and how will it impact the crypto market? People are taking on more debt for several reasons: to invest in big-ticket items like homes and education, to smooth out cash flow between paychecks, or simply to keep up with the rising costs of living. But here's the problem: as more money goes into servicing this debt, there's less money available for spending elsewhere. And this rising debt burden is not just an individual issue, it's a systemic problem. When millions of people struggle to pay back loans, the effects can be felt across the entire economy. In the US, the use of credit cards, auto loans, and mortgages fueled decades of economic growth. But now, this rising debt is starting to hurt. Higher interest rates and an economy struggling to keep up with inflation are creating the perfect storm for a crisis. But what happens when the debt bubble bursts? And more importantly, how does it affect crypto? If this consumer debt bubble bursts, the financial markets will feel it, and so will we. Banks and lenders become cautious, tightening the flow of credit. The entire financial system becomes more fragile as people fall behind on payments. But what does this mean for crypto? Here's the catch: as the traditional financial markets slow down and investors seek safer options, more people could turn to cryptocurrency as a store of value. Bitcoin, in particular, is often referred to as digital gold during times of economic uncertainty. But while some see crypto as a safe haven, the truth is that this crisis could also make the crypto market more volatile. As the financial system tightens and credit becomes harder to access, the demand for assets like Bitcoin could increase. But at the same time, if people start facing higher costs and debt payments, they may start selling off their crypto to cover basic expenses. So while some investors may flock to crypto, others may abandon it for immediate liquidity needs. The question is, will crypto thrive in the chaos, or will it face even more instability? Let's look at how crypto might behave during a consumer debt crisis. When people face higher interest rates, debt repayment pressure, and fewer financial options, they often turn to assets that can store value outside the traditional system. This is where Bitcoin and other cryptocurrencies come in. The decentralized nature of crypto makes it attractive as a hedge against traditional financial instability. But there's also a downside. As consumer debt rises, financial institutions become more cautious, and liquidity in the market decreases. This could lead to reduced investments in crypto, and we may see a period of stagnation or price corrections. In fact, the very characteristics that make crypto appealing as a safe haven in some cases, such as its volatility, could also create sharp market fluctuations during times of crisis. In the long run, however, this debt crisis could work in favor of crypto. The more traditional financial systems struggle, the more people will turn to alternative investments like cryptocurrencies. But to truly benefit from this, it's crucial to act strategically and not panic. We've seen how traditional markets can overreact, and we might see similar reactions in the crypto space. In a financial crisis, assets like Bitcoin could appreciate in value as people look for a hedge against inflation and a store of value. However, for altcoins and smaller projects, the outcome may not be as promising. If liquidity dries up and investment flows shrink, we could see altcoins suffer while Bitcoin and other top cryptocurrencies hold strong. Now that you understand the risks and rewards of investing in crypto during a debt crisis, it's time to take action. Are you prepared for the potential financial chaos? Are your crypto investments secure, or could they be at risk if the debt bubble bursts? If you haven't already, make sure to secure your crypto with the right wallets, diversify your investments, and always stay informed. The debt crisis might be coming, but you can be ready for whatever comes next. Subscribe to the channel and hit the notification bell so you don't miss any important updates on how to navigate the coming financial storm. Comment below with your thoughts on the debt bubble and how it could affect your crypto investments. Let's stay prepared together. The easy money era is over, and the pressure on consumers is rising. But one thing is clear, crypto could be a key player in this crisis. Stay tuned, stay informed, and protect your wealth while you still can.